Yields, as we mentioned, higher. The major averages slipping just a bit this morning after Monday's intraday comeback pushed the S&P 500 just barely to a 6-day win streak. Let's bring in Stifel chief equity strategist Barry Bannister. His year-end S&P target is 5,500. That's just a bit below where we are right now, 5,941, almost 10%. Barry, it's good to see you. Talk to me about what's going to get us to that point where the market has to have some kind of reckoning here. It seems like this comeback we've had in the last 6 weeks, cyclical's kind of leading, industrial's at a new high. Is that a false signal for what you expect from the economy?
Well, there was a big sell-off, as you know, in cyclicals, including what is cyclical tech. And, of course, we've had a retrace rally. But, this is a transitional year, not just in Washington and what's going on politically and economically, but for the consumers. We've had a binge since the COVID handouts, and I think there's going to be a bit of a pullback on both personal consumption and business uncertainty, causing capital spending and even high interest rates with housing. So the middle quarters are going to be weak. And the question is, will the market care? Given that it seems to move more on tweets.
And so what's the posture then in terms of how you deal with, okay, we've had this big comeback. I would say, a lot of people looking at, a lot of the sort of signposts and benchmarks of this rally. It seems like it's got good breadth support and momentum. So on a technical basis, it feels like the market is in grind higher mode. Why should you fight that?
Well, keep in mind your risk-free yields, as you just showed on the board, are pushing 4.5 on the 10, for example. So risk-free is looking awfully competitive against risk. We've seen a cut in forward earnings estimates. Our view is that forward earnings will fall to about 5% growth. I was just looking, and they're at about 7.5% next 12 months now. So we're going to take some out of the latter part of the year on earnings estimates. The market is expensive. Valuation only matters when you get to extremes, high or low. And I would say that we're pretty high right now. So what you end up with is that consolidating choppy market, which we calculated as about 5,500 year-end S&P 500, down 7.5% from current levels. And you could, in the soft late summer, early fall period, as people realize the sudden adjustment of hard data to the surveys, you could see 5,250 on the S&P 500, and that's about another 10% correction, an echo correction from the nearly 20% we had a couple months ago.
Yeah, I was going to say, we've been there at least for a little while, not that long ago, below 5,250 as a matter of fact. Final point, I know that there are times when the megacap tech cohort feels like it provides insulation from a lot of macro pressures and tariffs and things like that. You think it's wrong to think of it as defensive?
Yeah, initially after the massive spending handouts, the money handouts after COVID, the consumer was seen and the tech capex for people to work from home was seen as defensive. And then tech did a huge round of cost cutting, and that preserved margins even when things softened up. And now they're seen with AI spending as being defensive. So what we'll see is the catch up on that. They are cyclical. It is a capital decision. And also advertising is completely discretionary when business profits come under pressure. So given their cyclical nature and their multiples, we think there's going to be a pullback on both earnings growth and the value of those stocks.
Barry, where does that leave the international component, especially when you got Poland up 50% for the year? How much is left there?
Well, yeah, the thing about international is it really would thrive on better growth abroad and a weaker dollar. But the relative earnings growth of MSCI non-US is actually pretty good. And there is more value on the international. We do need a stronger economy, and that would also help small cap and value even more. But right now, what's going on, I think, on international is very exciting, and we're doing more work on that as we speak.
Barry, appreciate the update. Thanks. We'll keep it to it.